Hi, I'm Rusty Vernon, President and Chief Investment Officer of Vernon Management Group. If you're new to these videos, today we're going to be discussing technical analysis. Specifically, we're going to be discussing technical analysis of an individual stock, how to make a purchase on a timely basis, and also how to limit your risk. Hello everyone, this is Rusty Vernon of Vernon Management Group. Today we're going to review the weekly price chart of Apple, an investor favorite. As usual, all materials covered in this video are for informational purposes only. So let's get started looking at the chart. This is a weekly price chart. So every bar here is a week's price action. So you can see right here where my cursor is, that's a whole week's of price action. And you can see it made a low this particular week. And the horizontal bar up here is where it finished for the week. So I'm going to start here in January for the week of January 7th, 2022. And let's note that Apple stock hit a high price that week of $182.94. Now, this red dotted line right here is showing the beginning of the S&P 500 bear market, and really got started in a big way January of 2022, and then the market kept falling throughout the year for 2022. But looking at Apple specifically, Apple had a series of lower high prices as the bear market took hold. Let me see if I can do this. So you can see my red arrows here show a high price here, another high price here, which is lower than the previous high price, which is lower than the previous high, and happened again there and again there. So what we really, in order to buy a stock that is trending higher, we want to see the reverse. We want to see the stock begin to make a new high price that's higher than a previous high. And that may indicate that it's a good time to buy the stock, because we really, to protect your capital, you really don't want to buy something that's falling in price. And if you look at these things over a little bit of a longer term view, the bird's eye view, you can really start to see a pattern emerge. And so while a stock is, doing what Apple did in 2022, making lower high prices, it's something to really stay away from. 24th, I made a note down here, this first green arrow right here. This is the first time on a weekly basis that the stock actually made a higher price than the previous high. So the note down here on 3/24/2023, there was a breakout and close above the prior peak of $157. So this peak where my cursor is pointing was $157.38. And for the first time on the 24th of March, the price closed up here. So that told us that we had a buy opportunity. And like all good investors, we should all use a stop when we purchase something, because what's paramount is protecting your capital. It's one thing to think that a stock is going to trend in your direction and the price is going to go up, but so many times we're wrong. So the only way to really protect your capital is to have a relevant stop price. Well, the low of this consolidation right here, so this consolidation lasted 1, 2, 3, 4, 5, 6, 7 weeks. The low of this consolidation was $143.90. Now, if you were to buy the closing price on this week right here, you would have bought at $160, And if you use 143 as your stop, that would have been approximately 10.2%. So, you can risk 10% of your capital, invested capital. So you have a limited downside and unlimited upside. So that's kind of the sweet spot. That's what you want to try to accomplish. Where can I buy the stock where I have, a 10% risk? So if someone's going to invest $10,000, 10% risk, you risk $1,000, but you have unlimited potential. The stock could double in value. Somebody puts in $100,000. They're going to have $10,000 of risk, but unlimited upside. So something happened I think, very interesting the week or two after the initial breakout price at 160. This light blue section right here, these are the weekly closes over the next 1, 2, 3, 4 weeks. A lot of people would call that a 4 weeks tight period. And what that simply means is the closing price each Friday was within 1% of the previous closing price. And if you do that 3 or 4 weeks in a row, that's a sign of accumulation. Investors are not willing to sell. And then for a period of time, they're not really willing to bid the stock up either. So that's kind of the stock winding up, and it's winding up tighter and tighter. And what you want to look for at that point is a break above that 4 weeks tight price. And we had that on the 28th, right here, this particular week. And that was the 28th of April. And it closed at $169. So that was your second opportunity to buy the stock at a reasonable, logical breakout. Now, the low of that consolidation or 4 weeks tight period was $155.98. So roughly 8% below the closing price of the breakout week. So again, if you didn't want to buy any more stock, you could have raised your stop from 143.90 to now 155.98. Or if you wanted to, what a lot of people like to do is pyramid into the stock, you could have added to your initial purchase. Typically you would want to, if you're going to add, you want to add fewer shares because you want your average price, original price, not to be too high. So if you bought 1,000 shares on the first purchase, you maybe would buy 500 or 600 shares on the second. If you bought 100 shares on your first purchase, you might buy 40, 50, or 60 shares on your second purchase. But Apple has offered 2 legitimate buying opportunities with 2 legitimate stop areas that have offered, investors a unique opportunity to potentially ride a new trend. Now, something else that happened just this past week, on the 16th of June, right here, the stock closed at 184.92. Now, if you'll notice all the way back over here, back in January of 2022, the intra-week high price was 182.94. So Apple has now closed at an all-time closing high on a weekly basis. And that really, really can, I guess, tell us all that there's a big potential for Apple to keep going higher. What you might want to look for, I have made a note down here in this yellow box, is at this point you want to watch for a new consolidation or a box. I kind of like to call it just a box formation right here, just like what happened in late March. But look for a new consolidation or a box formation or more tight trading like happened right here in April, those 4 weeks. And then look for a new buying opportunity with a legitimate area to put your stop in. The ideal basing period is usually 5 or 6 weeks. So if it's going to be, a new base, it's probably not going to, the new buy point won't be until mid to late July. If we do a pattern where it goes sideways, you want to at least have 3 weeks of tight closes. And, so again, that puts us into July. So Apple is definitely something to pay attention to. You want to try to look for a new basing period or a new sideways period with tight closing prices. And, just a reminder again, no matter where you purchase the stock, if you decide to purchase, you want to have a stop in place and know what your stop price is before you place your order. And as long as you pay attention um, to the stock, or for whatever stock you're looking, try to pay attention every day, every week to what's happening with the price, and you should be ready for your next winning trade. That's it for today. Hope everyone has a great week. See you in the next video. Thanks. Hey, thanks for watching today. We'll be posting a couple of times a month. If you have anything that you're specifically interested in, please comment below and we'll try to post about it.